the global economy can significantly impact your personal finances, affecting everything from your investments and savings to your income and daily expenses. Below, we explore how various factors and worldwide economic events can influence personal finances, illustrated with examples for greater clarity. 1. Global economic growth. Global economic growth refers to the rate at which economies around the world are expanding. When the global economy is expanding, there is generally an increase in job creation, higher wages, and increased demand for goods and services. Example, during the 2010s, many economies experienced sustained growth. This led to increased business investment, more job creation, and rising stock markets. If you had a pension fund invested in a mix of global stocks, you likely saw a significant increase in its value. However, if global growth slows or enters a recession, it can lead to stock market losses, job reductions, and stagnant wages. The 2008 financial crisis is a clear example. The resulting global recession caused a drastic fall in asset values and increased unemployment in many economies. 2. Inflation and interest rates. Inflation measures the overall increase in prices of goods and services in an economy over a period. High inflation can erode the purchasing power of your money, meaning you need more money to buy the same products. Example, in the 1970s, many developed economies experienced high inflation. People found that the money in their savings accounts lost value rapidly. To combat inflation, central banks might increase interest rates, making loans more expensive but also making savings more profitable. If you have debts, especially with variable interest rates, your monthly payments could increase. Example, in recent years, some countries have increased their interest rates to combat inflation. If you had a mortgage with a variable interest rate, your monthly payments might have risen, affecting your monthly budget. On the other hand, savings and investments in fixed income products can benefit from higher interest rates, such as certificates of deposit offering higher returns. 3. Exchange rates and international trade. Exchange rates are the rates at which one currency can be exchanged for another. Fluctuations in exchange rates can affect your finances in various ways. Example, imagine you are planning a vacation in Europe. If the value of the US dollar rises against the euro, your vacation becomes more affordable because you need fewer dollars to buy the same amount of euros. However, if the value of the dollar falls, your vacation becomes more expensive. Additionally, if you buy imported products, fluctuations in exchange rates can affect the prices of these goods. Example, if you frequently purchased electronic products made in Asia, a depreciation of the dollar against Asian currencies could increase the prices of these products in local stores. Companies operating internationally can also see their profits affected by changes in exchange rates, impacting your investments if you own shares in such companies. Example, a U.S. company that exports a significant portion of its products to Europe might see a reduction in its profits if the euro depreciates against the dollar, making its products more expensive for European consumers. 4. Global economic policies. Economic policies implemented by governments and central banks worldwide can significantly impact the global economy and, consequently, your finances. Example, expansionary fiscal policies, such as the economic stimulus programs implemented during the COVID-19 pandemic, can stimulate economic growth and benefit investors. Direct payments to citizens and increased government spending helped maintain consumption and investment in many countries. Conversely, austerity policies, such as those implemented in some European countries after the 2008 financial crisis, can have a contractionary effect on the economy. Example, Greece implemented severe austerity measures resulting in prolonged economic contraction and increased unemployment, significantly affecting the personal finances of its citizens. 5. Geopolitical and social events. Geopolitical events such as conflicts, trade wars, and changes in political leadership can create uncertainty in financial markets. This uncertainty can lead to increased volatility in stock markets, affecting the value of your investments. Example, the trade war between the United States and China, which began in 2018, generated uncertainty in global markets. Technology companies with supply chains in China saw their stock prices fluctuate due to tariffs and trade restrictions. Additionally, changes in trade policies can affect the prices of goods and services you consume daily. Example, if tariffs are imposed on imported goods such as steel and aluminum, production costs for certain goods, like cars and appliances, can increase, passing those costs on to consumers. 6. Technological advances and globalization. Globalization and technological advances continue to transform the global economy. Globalization allows greater interconnection of markets, facilitating international trade and investment. However, it can also lead to job offshoring and increased international competition. Example, many manufacturing companies have moved their operations to countries with lower labor costs, which can result in job losses in specific industries in developed economies. Technological advances, on the other hand, can drive efficiency and economic growth but can also disrupt entire industries, affecting jobs and wages in certain sectors. Example, automation and artificial intelligence are transforming the manufacturing and service industries. While these technologies can increase productivity, they can also eliminate repetitive jobs, affecting lower-skilled workers. Tips for managing the impact of the global economy on your finances. Diversify investments. Maintain a diversified portfolio to reduce risk associated with global market volatility. Investing in a mix of stocks, bonds, real estate, and other assets can protect you against fluctuations in any specific market. Example, if your portfolio includes stocks from different sectors and geographical regions, a recession in one region might be offset by growth in another. Stay informed. Follow global economic and financial news to anticipate potential impacts on your finances. Use reliable sources and consider multiple perspectives to have a comprehensive view of the global economic situation. Example, subscribing to financial news bulletins and following economic analysts on social media can provide valuable information for making informed decisions. Prudent saving and investing. Ensure you have an emergency fund and consider investments that offer some protection against inflation. An emergency fund protects you against financial setbacks, while investments in real estate or inflation-linked bonds can maintain your purchasing power. Example, having an emergency fund equivalent to 3 to 6 months of expenses can help you manage periods of unemployment or medical emergencies without resorting to debt. Long-term financial planning. Work with a financial advisor to develop a long-term strategy that considers potential global economic impacts. A solid financial plan can help you set clear goals and strategies to achieve your long-term objectives. Example, a financial advisor can help you plan for retirement, ensuring you have enough savings and diversified investments to maintain your quality of life in the future. In summary, the global economy has multiple facets that can influence your financial life. Staying informed and adopting proactive strategies can help you navigate these changes and protect your personal finances. The interconnectedness of modern economies means that events in one part of the world can have significant repercussions in another, and being prepared will allow you to face these challenges with greater security and resilience.